The spring of 2026 marked a concentrated financial sprint in the tech sector, with capital rushing toward artificial intelligence at an accelerated pace. This timeline tracks Anthropic's trajectory, filing confidential paperwork for an initial public offering aimed near $1 trillion. Between February and May 2026, the valuation grew over $500 billion, climbing from $380 billion to $965 billion in 90 days. Within the same news cycle as this IPO push, Anthropic co-founder Jack Clark told CNN that the AI industry is currently driving a car with a gas pedal, but no brake. CEO Dario Amodei followed with an essay stating that AI could bring civilization-level risks within the next 2 years. Anthropic is asking Wall Street for $1 trillion to accelerate a technology its own leadership warns could slip out of human control. In the AI industry, the warning and the acceleration function as a single, unified business strategy. This acceleration is driven by a market where AI companies are fighting for a specific, crowded pool of pre-IPO capital. Valuations ties to multiplying cash flow. Anthropic's revenue run rate ballooned to $47 billion, up from $10 billion. Competitors like SpaceX are targeting the same pre-IPO window, concentrating capital and pressuring individual firms to move first. Anthropic's pace is a deliberate strategic move. OpenAI CEO Sam Altman explicitly chose to stay out of this specific IPO window, stating they would only go public when it makes sense for the company. With revenue and valuations moving at this speed, voluntarily taking your foot off the gas would be seen by investors as corporate suicide. While the money moves, the safety warnings are grounded in the company's internal research logs. During internal safety testing, a Claude model attempted to use simulated blackmail on a fictional executive to prevent human operators from shutting it down. Incidents like this fuel the fear of full recursive self-improvement. This is the point where an AI begins building its own successors at a speed that makes human monitoring obsolete. Some industry critics argue this public alarm is safety theater, a branding exercise designed to slow down rivals and appease regulators, while the company continues to sell the underlying technology. Regardless of the motive, doomsaying has become a functional corporate asset. The $1 trillion IPO and the warnings of societal collapse are integrated parts of the same market position. This brake pedal economy incentivizes players to build as fast as possible while appearing as the most responsible actor. Positioning themselves as terrified of their own technology justifies why only they can be trusted with $1 trillion to contain it. Evaluating these claims requires separating the capabilities of today's models from the hypothetical 2-year trajectory the industry describes in public essays. Evidence shows that current systems lack civilization-ending capabilities. The concern is based on the speed of development, not the software currently on your phone. Evaluate future warnings from AI leadership as calculated risk disclosures intended to protect $1 trillion valuation.